Good morning to all of you in the Devil Dog Day Trade community. My name is Michael, and I'm going to be taking you through a special weekend setup process for our trading day. Special welcome to all of you who have served or are serving in the armed forces. And here we do save the best for last, so a more special welcome to all Marines out there. Semper Fi, Jarheads. Just a note on the special session today, a couple of reasons for that. First of all, as we are going live with this channel this week, however, we're unable to do a show tomorrow, so wanted to get something out there. And for the most part, anything we do on Sunday is relevant for Monday anyways, as all of the markets are currently closed. And also, we are coming off of a holiday weekend, so there's a little bit of additional information to share about how those affect the markets too. So we'll be getting into a little bit of that as we go through our normal process here. For all of you here that are joining us for the first time, we're on a journey together, and we have people from all skill and experience levels as part of this community. There'll be information presented in ways that will resonate with each level of understanding and experience. For areas or comments that don't make sense to you immediately, please don't hesitate to ask a question in chat for clarification. And also check out some of the other videos we have in the channel for additional information that will help these sessions make more sense to you. And of course, please don't forget to subscribe to the channel, as there will be several additional videos that we post here in the near future to, again, continue to build on that foundation. Just a reminder, this feed can be delayed up to about 30 seconds on YouTube. So if you put a question in chat and you don't see me respond to it instantly, that could be the reason why. I will make sure that I respond to as many as I can. And we do have time usually at the end of every session that is dedicated just to responding to those questions for you. So let's go ahead and move forward into our normal overall agenda. Just a reminder here, we do go over index correlation markets first. Forex markets go into futures, and then we look at crypto, ETFs, and stock for options purposes towards the end of the show as we have time. So as I stated, we do take a look at the previous 24 hours worth of information and to see what's happened here. And to do that, I usually use the Forex Factory calendar. Now on the calendar, obviously we don't see a whole lot here because it is a weekend and very few things actually happened over the weekend. So let's just look forward to for the day tomorrow, and we'll get into some of the holiday weekend stuff depending on which markets that we talk about, since most of those are relevant to each individual market. So coming up on Monday tomorrow, for stuff that we typically trade here, you'll see one of the first things on the list, the JPY. It's got an orange folder here. Forex Factory does mark things based on color on their impact. And so orange is moderate potential impact. And since we look at the Japanese yen, that is something that you may want to pay attention to if you're going to actively trade it tomorrow. Moving on down, we've got a couple of things down here that we are look at as well. So for USD at 10 a.m., we've got pending home sales. For the euro, which we do look at as well, since that's a good market to trade based on some of our correlation and index markets. You got the European Central Bank president speaking at 12:15. And then for Canada, you do have the Bank of Canada governor speaking. We don't look at Canadian currency here. However, it can potentially impact the U.S. markets as well. And then finally at 3:05 p.m. you have the Fed Chair Powell speaking, and those are red folders. You see that again because those are potentially significantly impacting to the financial markets. If you're looking for additional information for each one of these, again, a Forex Factory, you click on this folder over here on this column, and that will open up a new section in the website that will explain a little bit in more detail about each individual area. So let's go ahead and move on to our markets. We do start with the DAX just because it's the only one not available on my standard charting platform of TradeStation, so I have to use TradingView for this one. And what we're looking, usually when we start either on these weekend sessions or for the Monday one, we start at the weekly time frame because we want to get a good context for how things look on the largest time scale that is reasonable for us to be trading in. And what you'll see here, of course, is over the last week, we've had just a significant drop in the overall markets. And we've got an area of interest that it's coming up to right now. And if you'll look at the top of the picture here, you'll see a legend, which does show what some of the lines and colors mean on the charts. That is typically for TradeStation, although because TradingView doesn't have the same options. But what I'll show you here, so this would be an area of interest, and on TradeStation this would end up being a dotted or a dashed line here, because we wouldn't be taking this immediately. We would be looking for some additional confirmation that this area is going to work for us, based on our supply and demand areas here. So we'll dig into this a little bit lower on when we get into the smaller time frames, but just to understand that this area here, it could potentially change price, but isn't a high probability to. So flipping down to our daily chart, this is one where we're going to look for setting up context for the upcoming week overall. And what you see in this same area here that we had identified on the weekly chart, there isn't any additional demand formations that we can see here. So another indicator that this area may not work. Again, you will see just based on the last 1, 2, 3, 4, 5, 6, 7 days in a row now, this market is headed down, and we would expect something a little bit more certain to be changing that direction. So as we look down and left here, we are not seeing anything that jumps out at us as a highly probable area where the price direction is going to change here. Let's jump down to our hourly chart. This is what we use to look for areas of interest that could happen during the actual trading day itself. And one of the things that we typically look for is when you move the chart all the way to the right, you look down and left, you see no price action down here within this time frame. That means that on the 60-minute time frame, any demand zones down here are unlikely to be strong enough to actually change price direction. So we'll leave the DAX for now and just understand that it is still in this significant corrective action down and isn't likely to change direction in the near future. So moving on to TradeStation platform, where we look at the remainder of our markets we'll start with the dollar index. Since the dollar is considered the lead global currency, and so it does affect every single market out there. And again, we'll start at the weekly time frame, and what we're seeing here overall, I'll zoom in on this just to make this picture a little bit easier to see for everyone. We've got, over the past several months now, we do have this fairly substantial move up. We are seeing that it's coming. This move up is probably getting close to corrective action area here, which is why we weren't surprised to see it come down a bit. And we have this area down here at 92 or 93.26 that has already been used. However, price barely came into this particular area. So this is one where, because price barely touched it, it could respond to this area again. So that's why we're leaving this demand zone up, because we do think that there is a little bit higher than normal chance that this is going to work again. So if price comes all the way back down here, this would be another place to get back on this longer move up again. Moving down into our daily time frame. Again, I'll zoom in just to make it a little bit easier to see here. James, thanks for joining us. New COVID variant will continue to impact trading tomorrow. It's a really good question. Just a quick reminder, we do only trade supply and demand areas here, so we don't trade news. However, news does impact price action, so it's good to keep abreast of it and understand what is going on. What we have seen now over the last couple of variants or couple of surges is that those have impacted trading by a couple of days, not significant time frames like the original COVID release back in 2020. So I would honestly be surprised if it lasted more than a day or two. But one of the things we'll look at specifically in the index markets when we get there is, are there areas of demand that price is coming to, which we would look for it to change direction and move back up again, irregardless of what's happening with the new COVID variant. But if you still have questions about that after the index portion of this, then let us know. Thanks. So on the daily chart for the dollar, we are seeing that price is coming down into this area here. And you'll notice I have it drawn with dashed lines, which again, according to the legend, means it's an area of interest, not one that we would take automatically. And the reason for that is when we look left, we're not seeing any of our additional odds enhancers of why this would be a high probability zone, but it does meet our formation requirements of the rally, the leg in, the base candle, leg out. And so what we look for here, if price comes in here over the next couple of days, look for on a smaller time frame like a 240 or a 60-minute time frame, look for that confirmation of price changing direction. If you get that, then this may end up being a good zone for us to take in. But we are seeing the opportunity here within the next dollar and a half or so move down, where we could get that stronger move back up again. So let's go down to our 60-minute, or sorry, let's start on a 240 for the dollar here, just to, again, to see what we have. And again, I'll zoom in, and interestingly enough, in this exact same area, so as you're looking down and left here, we're looking for those formations, and honestly, I'm not quite sure how we missed this before, but I'll go ahead and draw on the chart now. So we've got a very specific, unique kind of a supply and demand zone formation right here, which we call a picture perfect zone, and that name is not going to make sense to most of you yet. We do have a deep dive education session coming up that will explain exactly what those are. But basically, just in general, it is a combination of two of our either supply or demand zones in a unique way that is a higher probability that these zones will work. So just to kind of show why this is relevant, so this whole zone area here, right between 95.64 and 95.47, if we go back and look on our daily chart here, this is almost in that same area right here. This is just above where this daily zone is at. You can see this is 95, not 95.14 to 94. Was it 94.96? And so these are good indicators where price has a higher probability of changing when you get into when you have these multiple zones lined up within different time frames. Now, typically speaking, what the picture perfect zone rules will show us is that when you have this very, very strong leg out from the second zone here versus the leg out from the first zone, actually, let me move on here. What you've got here is this leg out from this second zone here versus the leg out from the first zone. What we have that typically means is that the first zone, which is this area right in here, is going to work versus the zone on top of it. And so what we want to do is then you just understand that that price may come through this first zone here into the lower one based on those particular rules. But this is a very, very good, very solid picture perfect zone, which usually means these areas work and work very well. We do have the area right below it as well, and this one is lined up a little bit more with that daily zone as well. And you'll see to some extent this is also that picture perfect zone as well, with your leg coming in, drop leg here, you get your base, a leg out, another base, and then a leg out as well. So two very, very solid areas where higher probability of price changing direction in both of these areas. I did draw this one out with the two zones on top of each other, but so that you get a good indication of how I look at these, I would actually draw, if I were going to take this myself, it would look more like this right here. And I'll go ahead and mark that one up. With our yellow box that shows us a zone that we're likely to take. Okay, so going down now into our 60-minute time frame. price areas here that we think are a little bit more likely to happen during the next day itself. And I'll zoom in on this whole entire area here. So we did have this area of interest here with the dashed line. And you can see this kind of a good indication of why we sometimes do areas of interest rather than putting, locked in zones for these, because there just weren't enough other odds enhancers that were going to make this one work on a higher probability. And so what we saw is when price came in here, right here, we did get a bounce out, but then it came right back down. So we knew price was going to move to some degree from here, and it did, but it wasn't a good solid move up. And so we'll take that one out. We've got the same thing happening now down here at the 95.83 area, where we've got this other, this technically is a zone. However, when we go through our odds enhancers, we look at it and go, okay, that doesn't check enough of those boxes, so we're not going to lock it in as a solid one, where we would look for, maybe look down at like a 15-minute chart or a 5-minute chart to see if price is going to change once it gets down into here. The only thing I would say going for this one right now, just because of the very strong movement down over the last day, is that we are, if this is a continuing, up move, and let me just zoom out just to show that in a greater context, right? We've obviously, price has been moving up pretty substantially now, and you can see this whole flow, right, of a price moving up, correction, price moving up, correction, price moving up, correction, price moving up. This is a little bit of a stronger move up now, right? And so maybe a little bit stronger correction down. We're still kind of in that phase. So if we don't think price is actually turned around and going to change trend here, then this would not be a bad area for it to respond and continue to move back up again. So just keep an eye on this. Again, look for that confirmation on the lower time frame that it's going to work. So from our dollar chart, let's go look at the VIX. This is the volatility index. Basically shows how much the index markets are moving. And we'll start on a weekly time frame again. And what you can see here is we just, again, a very strong move up again this last week. And in the overall context of things, right, you've got this, we're basically still on this almost same trajectory down. We did break it just a little bit. I'll actually draw this trend line out just so we can see that, because when things break their normal movements, it's worth noting. And so you can literally draw this chart, or this line here, right? It's almost perfect. And as you extend it out past there, we've now got a full candle, a body of the candle that has closed above this line. So that could be an indication that that we could see another, a bigger move up here. But again, if it's just not supply and demand, so we're not going to trade it. Just again, understanding context of where we're at here. Let's jump down to the daily chart now. And this will give us another indication. And one of the first things that we see when we look at charts like this is we've got our Bollinger Bands here. Again, one of the indicators that we use. There's some additional information on this in the introduction to trading video in the channel. And what you'll see here is you've got an entire candle now that has gone above this 2 standard deviation upper limit of the Bollinger Bands. That is very unusual. You can actually see if you look over here to the left, when the last time that happened, you had this kind of corrective move back down to get back within the 2 standard deviation bands here. I would expect something like that to happen again. So look for this correction at least to come back down within the band areas. And again, when just remember these are opposite correlation areas. When price is going, or when the VIX is going up, usually index markets are going down. If the VIX is going down, the index markets are usually going up. So let's look, do have something here on the 180-minute chart. I know it's not a normal one that we use, but just wanted to show this, that we did have this, and if you look actually, let me pull this all the way over here. If you look all the way to the left, here where you see this is demand zone that we have, I go all the way to the left here. You'll notice that even after quite a few months actually. This did work very, very well, and price is just moving up from it right now. Now, what we do have is when you again look up and left to see where price might change from here, and you'll see there is no price action above here. So there's nothing that we're interested in this time frame of actually looking into of why price might change here. So let's look on our 60-minute chart. Again, additional information on this concept in the introduction video, but we typically just use a couple of time frames here as part of our standard ones, and that is the daily, 240, 60-minute, and 15-minute. So we will always go over those, but when something else is interesting on a different time frame, we will take a look at that as well. And again, so we're in a significant move up here. Let me zoom in on this area. So I'm going to look down and left, and as I move my cursor down and left, I'm not seeing anything that I am interested in using at this point. And again, when we go up and left, there's no price action there. So nothing to base any trades on the 60-minute time frame here. And we have to wait for some other formation to develop to actually show us and give us a high probability of anything working. And that's where we stop for the VIX. I don't usually go into any lower time frames because, again, these are indicators of where the market is headed in a bigger picture direction and not necessarily used for any small time frame trades. Moving on to our Forex markets, we only look at a couple of them here because they are good anti-correlation markets to the dollar, and they also have futures markets aligned with them as well between the euro and the Japanese yen. So those are just additional indicators of where price might change, and that's why we look at them. We want as many odds enhancers, as many of these additional indicators as we possibly can. Let me just change the color of a couple of these so we can see them a little better. And again, big picture here in the weekly time frame, we are just looking at, this significant move down here, which means that there's going to be some level of a correction at some point, and we're seeing that, within this last weekly candle here that actually closed off green. So that's a good indication that this move back up is happening, and we've got a nice area up above where price could change and to get back in on this bigger move down here. Let's go into our daily time frame because we've got another area. So it's not the same one, it's another area here on a daily chart, which could be a good indication of that movement down as well. Again, we are still bigger context, right? We're in the substantial move down. Look for these corrections to happen. And then when they do happen, these are the right areas to get back in on these moves coming back down again. Again, just a good solid formation that aligns with our rules very well. With actually has 2 leg candles in, 1 base, 2 leg candles out. Again, very strong formation to use. Let's go down to the 240-minute chart. We had a great trade on this one, work out really well last week, where we had this modified. It's close to the picture perfect zone right here, and you can see a price came down, did its corrective move up, jumped in and went down, and that was just, you could get a very substantial return on that particular trade. Notice the lines are dotted now. That means that price has already, this zone has been used. We are not expecting it to work again. We would not take another trade here. We're just marking this until price comes back up. If it comes back up through here, we'll just delete this off. But we do have an area right above it again. This would fit with that corrective action there. So just another area where you could get back in on the bigger move down. All right, on a 60-minute chart, let's take a look at this because this is a good indication of something not working. And we like to track those as well because that certainly helps us understand, how we can make this whole process better for us. And so we had this area drawn here on a 60-minute time frame where we thought, price was likely to change. And as it turns out, the corrective action was much stronger than what we had expected, and so when price came back up through this candle right here, you saw it came right above. It did drop back down again by quite a bit, but it did break through, and this was a losing trade for us. I'll make that one red. So as we're looking at this, remember we are still in the overall bigger picture trend down, so we want to be very careful about going long and buying into this move right now. But we are going to look down and left. And what you'll see just very quickly is, about noon on the 27th, we did have this zone right here formed. Price came right back down into it, got it, and jumped up. Again, would not expect a significant move up from here, but this does technically check the box, and I just hadn't had it marked because I wasn't watching this particular market at that time frame. I don't do a whole lot of trading around holidays, just because the markets can be fairly erratic there, and sometimes it's safer to just stay away from them. But I'll go ahead and just mark this off as, just so we remember that it's here. This zone, it does exist. It fits our rules, and it did work to some degree. Keep going down and left, and again, nothing that I'm interested in getting on as a counter trend trade. Looking up and right. Again, typically speaking, what I'll do, I don't see anything here, and if I get to the end of the view of this chart and don't see anything good, especially on a mid to lower time frame, it's not even worth looking for, because those zones are so far away from current price that they're likely not to work anyways. Let's go ahead and jump down to our 15-minute chart real quick, just to see if there's anything that is that could happen in the literally within the next trading day itself. And you just kind of big picture look before I zoom in. You can see here we're overall still in that downtrend. However, we're in this corrective phase, moving up here right now, and this is you're getting to about the point where it would be logical for this corrective phase to end, and where price could be coming back down again. So as I look up and left, no price action here, so I'm not worried about that. But let's just see, what does this look like for potentially taking this one as a very short trade, back up again, just in case this overall corrective move isn't done. As I look down and left, there's just not anything here that is of interest enough to me to put a trade on for. I would not look to go long in this market right now. Moving down to our USD Japanese Yen. So let's go to the weekly time frame. Just change the color on this real quick so you can see it a little bit better. And again, just before I zoom in on it, you can see here, this generally speaking, overall downtrend. We didn't, this pivot low here did not take out the previous one, and has now come up and taken out this pivot high over here. So that's why we're looking at this as this is more than just a corrective action here. This is another move back up again, and it's, there's evidence of that, in several places where we're creating additional demand zones here. But it's far up in here, so another corrective action down would not be, unexpected. But as we're looking down and left, there's nothing here until we get to this area right here to get back on moving up again. So just understand we're in high up in this move here. A corrective action down is not unlikely, so we would be looking for something maybe on a daily or a 240 minute chart to get back on this move up again. So let's go look at that, see if we can find something there. All right, our daily chart. Significant, very, very long, single candle down for the day on this area. And as we look down left, we already have these areas marked off. And just note this is where I would get back on these and look to take these as for longer trades, moving back up again. But there's nothing between current price here and these areas that we're interested on the daily chart at least. So let's go look at 240, and what you'll see here, just before I zoom in on it, this back and forth between these areas here, this looks a lot like the white space area that we talk about in the introduction to trading video. So we're not looking to take any trades in here. So I'm looking down and left below it, and I do see an area, and I'll zoom in on this just so you get a better idea, right? We've got our leg in, base, 2, 3, 4 leg candles out. So, strong area here. Go ahead and mark this one off. And just curious myself now, 112.2, does this line up with any of the other zones we looked at on the daily chart? 112 points above these ones right here. So yeah, it's actually okay. So it's at this particular area. Got it. Okay. So yeah, I think that's another one. Again, if we're still believing that this is the bigger move up, which it certainly looks like it does, that would be a good place for a correction to end. So certainly something worth taking right here at the 112.226 area. And again, because we're in that significant move up, I'm not even looking for any of the shorts there. My rules, for the most part, prohibit counter trend trades. There are some situations where I can take them, but they're very, very, very infrequently. Let me zoom in on this area here. This is an interesting one, right? So we had these zones drawn. Shoot, I can't try and get the whole picture in here. This is going to be difficult, but it's worth seeing. So yeah, this should still be able to see this well enough here. And so we had this drawn right as a zone on top of a zone, and this is one we'll get into a little bit more detail in another lesson. But because you want to know like which one do I take, right? And so we'll look at odds enhancers for both of them. Typically speaking, my trading rules just let me take them both. I have found that to be a little bit easier for me to do myself, and that the data shows that is still an overall profitable way to handle this. But what you'll see is over here is the price just blew right through that first one. So that would have been, we'd entered it in, stopped out, and then almost immediately got into the other one. And price never actually stopped out here. We came very, very close right here, but then this one went up, and actually, let's see, my standard target for most trades is a 4-to-1 profit ratio. And sure enough, and just so you know, I'm not trading the USD JPY pair right now in Forex. It's part of my option trade plan. I just haven't done it recently. But this trade did work. So we'll kill this one off, right, and mark it red because it did not work. This helps us track these. And then the second one though already has. I'll take that one off. We'll make this one a dotted line just to show that it has been used, and we'll change the color to green. Now, what you'll see here is the price hasn't moved up substantially from there. Again, we're in a little bit of a bigger corrective move down based on what we've seen in the dollar and the euro and other areas. So it would not surprise me if this one did not hold and price would come back down through here and hit one of our 240 or daily zones and then make that bigger move up. But just to show you that that's how these zones work and why why we take them. But and we'll get into some, like I said, some more detail about which ones to take when you see them on top of each other like that. Let's take a quick look at the 15-minute chart here. Again, no action low and left, so we know we're not going to get back on along here, which is what we would expect given the recent price action, right? At this time frame, we're in a confirmed downtrend now. Let's take a look at up and left. this area here happened overnight, so chances are, sorry, it didn't happen overnight. This one happened at 9 a.m. But over the holiday time period, so that's probably why we didn't catch that one. Again, looking up, unless I'm not seeing anything that I'm interested in, it would have to be a much shorter one here to continue this move down. Once you get up into these areas up here, it's much more likely that that move is continuing up again. So we're not going to look for anything on a short time frame for USD JPY. Okay, moving on to our futures markets now. We'll hit the euro and the Japanese yen quickly. These two markets are normally, between the futures and the Forex markets, are normally highly correlated, which means the zones that are on one are the exact same as on the other one. So what I typically do is when I pull over to the futures ones, I'll just take a look very quickly at the whole entire picture and without zooming in on everything, just to see if there's anything that is substantially different where I actually want to take a look at it. And what I'm seeing right now is that is not the case. These pictures look identical to Euro USD, so that's why I wouldn't dig into them. If I saw a price deviation from them, where one was different than the other one, then that's what would prompt me to go in and take a deeper look into what the futures market looked and how it was different from the Forex market. So same thing with the Japanese yen, and what you're seeing is the exact same picture overall. And so just another indication. Sorry, I haven't changed these colors yet here. I'll do that real quick so they're more easily viewable. But you'll see this exact same formation on the 60-minute chart, where you had the two zones on top of each other, and the first one didn't work, and the second one did. But again, I wouldn't expect price to continue to move down from here. You're really looking at that was a smaller, just a smaller, really small correction, really. When you get down to it, didn't even hardly show up on a chart as a correction. So I would expect price to continue to go up to hit those other, 240 or daily minute or daily time frame zones. Okay, remaining futures in our commodities areas. Let's look at oil, because oil had a massive move over the weekend, and this was a significant impact based on a couple of things. It was a combination of the news market said it was a combination of the new COVID variant, which honestly, if you think about that logically, right, where price is going to drop because there is lower travel, so okay, I guess that there's some validity to that. But the bigger one there was the President Biden's decision to jump in to use the strategic oil reserves to tap into that to lower gasoline prices. So the combination of those two really did cause a little bit of this sell-off. And what we saw here, I'm going to just look at the daily chart first and then the weekly here just to show this. We had, and let's see here. So we had this area here that we had marked off, right, that we thought was going to be a very strong area where price was going to move back up again, and you can see it went right through it. And so this trade did not work. So I'll pull that one off. That's what happens when you have very strong movements, right? It can even go through something as strong as a good solid daily zone here. I'll mark that one out. And then we get into the weekly zone, and this is so just to kind of get an idea of the overall weekly picture here. So before I zoom in on this, again, you can see after that very odd, very bizarre situation where you actually had price on oil on the current contract at the time actually went below zero. So you were actually paid to buy oil there for a short period of time on that one trading day. It's been just a significantly strong move up, right? But again, we're still looking at that same kind of a wave idea where price moved up, we had a correction down, price moved up, correction down, up, correction down, up. So it's another correction down here. We're still in that overall situation. This area here is a very strong weekly zone. You can see price has gone very deep into it, but hasn't come through there yet. So we'll see what happens when the markets open tonight. So the futures markets do open at 6 p.m. Eastern time tonight. So it'll be interesting to see what happens with oil then. Are we going to keep dropping down, and we'll look for to continue down all the way into some of these other weekly zones, or will this one be strong enough and this is where we'll just continue that move back up again? In the big picture of things, we haven't changed the worldwide oil market that much. And as I said earlier, I don't think that these COVID variants really impact us, for more than a few days at a time until we kind of wrap our heads around them and come up, with what seems to be a reasonable plan for adapting to them. And then again, particularly in the U.S. market, tapping the strategic reserve, I think there was 50,000 barrels of oil released, and we go through like 20,000 a day. In this country, so you had 2.5 days worth of oil dropped into it. That's not going to make for a week's long change overall. So we'll just continue to watch this one and see what happens again at 6 p.m. When these markets open. We already looked at the daily chart, so we're just back here at the 240-minute chart. The reason I bring this up, right, we're looking at this this area up here. That we had drawn as this dashed line, right? We were looking for confirmation here. And interestingly enough, this doesn't happen very often, which is why it's not part of our rules, but this area did work twice, right? You did see price came back up in here and dropped precipitously from there. Again, looking down and left, there is no price action there, so that's why we wouldn't be looking for anything to change direction of this based on the 240-minute chart. And again, so I'm looking at these just very quickly, but again, this is a 60-minute chart. We're getting into medium to low time frames now. After this move, right, literally in one day, what price dropped, $10 a barrel, which is just, it does not happen very often. You are not looking for to take any trades in these things in the smaller time frames at all. You want to make sure that price has stabilized and it's drawing, new zones relative to current price down here, rather than looking anywhere else right now for this to stop. So just stay away from this until we get some more, call it normal movement, where price isn't dropping $10 in a single day, and then that's when I would look, anything below like a 240-minute time frame. I would just stay away from completely until we get a little bit more stability back in these prices. Okay, let's look at gold here. Again, let's always on these days we start at the top at the weekly time frames. And what you'll see here is, and I'll go ahead and zoom on this since it's small enough, we can take a look at it, is you've got this, we're back in this overall move down, right? And it is a trend as defined. Again, going back to the introduction to trading video, lower highs and then lower lows here until we got to this one. So you could potentially call this last little few weeks here a sideways trend. So you're not actually trending up or down, but just bigger picture, we are still in this downtrend. You did see that significant price correction down. That was when the dollar was going up. Again, these markets are typically opposite correlation. Dollar goes up, gold goes down. Gold goes up, or dollar goes down, gold goes up. This looks a lot like again, like the white space that we call it. So we're not trading any big, bigger, longer term moves in here, but we do have this area right below it. And again, this fits that trading strategy very well, where we don't trade in the white space areas. And you can see this is where the white space area ends. There's a zone right below it. So again, higher probability that this area is going to work fairly well. Obviously, it's very big, right? This is a huge zone. So you look for confirmation of price to change or something smaller, like maybe a daily or 240-minute time frame here, or you could potentially take this as an options contract in the ETF. GLD is the gold ETF, and there are options in there, and you can get in those with relatively small amounts of overall risk. Let's go back to our daily area here. And we'll just zoom in on this area. I looked at this one substantially, over the last week or so, where we had this drawn, and I'll just go ahead and scroll all the way over to it. Right, it's technically a zone, but it wasn't. There's not enough odds enhancers here that really made me comfortable taking this right off the bat. So what I did is I looked at this, and when price came up into this area right here and started on this day, so started on the 10th, 11th, 12th, 15th, this, skipped a weekend there, 15th and 16th. I looked on a 240-minute time frame and saw some great confirmation that price was actually changing there. And so went ahead and took that trade, and usually, as you can see, that was just the right way to handle those zones. It's why we have them as dashed lines. We're looking for that additional confirmation, and when we get it, then we know that that zone is higher probability of working, and we can take it. So we're in this corrective move back down again. I'm looking down and left, and again, this is on a daily chart, and there's nothing down here that interests me, so I'm not going to try and get back in on a bigger move, moving back up based on the daily time frame. But let's look at some other ones here. And so we've got down to the 240-minute time frame. Now we've got something that we could potentially use. And so again, these are dashed lines. And again, this is something that we'll get into over time as well, as I go in and kind of explain, over a few lessons and many more of these sessions of what the rules are and how they, how I apply them, so that some of these zones will then start making a lot more sense to you. Again, just for now, these aren't good, clean zones right here. For a couple of reasons. The primary one being this, this pivot low down here is below everything else. So this really was continuing on a downtrend versus a clear indication that trend was going to change and we were going to go back up. That's just the main reason there. But so we would look for potentially areas to change here. And one of the things that we're going to look at is the RSI indicator, and that's the indicator that we have at the bottom of the chart here. And the primary thing that we're looking for there is negative divergence. You'll see, this is just a good example of it. Price action was moving down, right? But on the RSI indicator, you'll see the RSI indicator itself was moving, and it's hard to tell when it's zoomed in, but it was, it's probably very difficult to see up on the screen you guys are looking at, but it was moving up just slightly. And so you had that negative divergence there, which was an indicator that this was going to work. And as you can see, price almost came into the zone, still hasn't quite yet. Again, we just look for those other indicators in areas like this to see if these are going to work. This is a 240-minute time frame. I would look on a 60-minute or maybe like a 30-minute time frame to confirm prices moving here. But I'm not, it's not a high probability area for me. Go back to the 60-minute time frame, and so just zooming in on this one, where again we had confirmed that we were in a downtrend, so that's why this zone here was drawn. There was enough other indicators that I said this is a good solid zone. Let's go ahead and use it. And what I have found, typically speaking, with gold price action, is it typically moves deeper into to zones. And so I won't take it as soon as price gets into one. However, every once in a while it'll kind of do a fake out, and as you can see here, price didn't even quite get to the zone that I had marked here. It was this high of 1816.3. I had mine at 1816.5. That's literally where the trade was sitting at, and so obviously that one did not get filled. Price has now moved out of there. Very, very, very high probability that this area is not going to work up again. When you see price move this far away from your defined zones without triggering them, your chances of this working out again are very, very low. Typically speaking, what I'll do is just call it what it is, right? I missed the entry. I got it wrong. Don't chase the price. no fear of missing out on this. Just let it go. Because it's on a 60-minute, and I would do this for, basically 60-minute and above. If you wanted to go down to like a 15-minute or a 5-minute, when price comes back up in here, you look for confirmation that price is going to change there again. Take it as a confirmation trade, but not as just a standard high probability trade. As you can see, we've also got areas here where we have our clear candle formations that it's set up as well, which again means it's more likely to continue down from here. And if it goes through all of this, it means you're on a much stronger move back up again. So chances of that zone working again are probably pretty low. I don't want to spend too much time on these ones right here, but just I'm going to pull these ones off, right? Yes, they are candle formations. However, we are in a significant, I just pull this up again, right? Back on the daily chart. Well, I was going to say we're in the significant, we're looking for a corrective action move back up again. It's just, so right there, right, there's my answer. If I've got to look at it that hard, if I've got to think through it that many different ways, the answer is my gut reaction was probably right. I'm not going to put them in. So I'm just going to do that, right? There's too much other things going on here. Not firm about them. We're not even going to try. So let's go look at our 15-minute areas. And this is, so that, again, as I was preparing for these sessions to start, one of the things that's on my mind is gold can move quite a bit, especially in the lower time frames. And I have found it just very, very difficult to use lower time frames to really understand where gold is going to change price action with. And so if you look at these areas here in a 15-minute chart, you'll see these are good, solid zones with good formations in them. And it's, price just didn't even care about them. I guess the top one here worked. Did it work to? Yeah, it didn't. See, it didn't hit my normal one, 4-to-1 risk to reward ratio there. So I've struggled with trading gold on lower time frames, and so I typically try and stay away from it. And this is just a good reason why. Neither one of these zones worked the way that I expected them to, and so I rarely look at them for where I think price is going to change, but I typically don't put trades in on lower time frames for gold just because it seems like I get them wrong or they get stopped out because gold can move so quickly on the lower time frames like that. So I'm just looking at this again. There's nothing else here that I think jumps out at me. So we'll keep moving on from gold area. And let's get into natural gas. We had some very interesting things happen with natural gas over the last couple of days too. But on a weekly time frame, what you're going to see here is we are in this range, right? The prices are just, especially in the last 2 weeks now, right? Price barely dipped out in this last week below the previous two. It's all staying within these areas, which means on a bigger picture perspective, you don't want to take anything here. Nothing clean coming up. Daily time frame, it's almost the same picture, right? You got a little bit more clarity here, where it looks like we're starting to set this downtrend, where we've got lower lows, right? Just real quick so you get a better visual here. Oops. Let me just reset the toolbar so I can get those tools back for me. We are setting, lower lows here, or lower highs, sorry, and then we are doing lower lows. So we're starting to set up a potential downtrend here. And so but you're still in the middle of all of this trading activity and nothing that I can see above or below really looks good enough to take. So bigger time frame, we're not going to do a whole lot with natural gas. So on going down to 240-minute time frame, we're starting to get above, this area right here. So that's good news for us. So I would look up and left, anything that we can jump in on to get down. And this is just, it's too messy, right? There's no clean leg in. Nice clean leg out here, but no clean leg in for any formations here. So I'm not looking at that. If I look down and left, same thing. And then there's no price action below. So we're still too much in the middle of all of that. Let's look at our 60-minute time frame here. And what we do see, let's change the color on this so you can see that more easily. And okay. So we had this area here of interest. It did pop in. It was used, and it came back in. It was actually did work. You can see here. I'm going to zoom in on this. Makes this a little bit easier. It actually worked again for a much smaller move. Again, we expect that. These zones typically don't work more than once, and then broke up above it. Again, just the bigger overall picture here, right? We still think on a daily zone. Remember that price looked like it was turning into a full downtrend, so you would be more likely to look for shorts, and get back in on that down move here. So let's look at this area right here. We know price is at 5,494 right now. I'm looking up and left, and there's just nothing is jumping out at me. There's no good strong formations that I would like to get into there. So not a whole lot on natural gas today either. The Nikkei, so this is a good both correlation market and one that we trade. It's always nice to get an idea of what the Japanese market does overnight. While the U.S. markets are closed, you can get a pretty good indication of what's going to happen when the U.S. markets open. So on a weekly time frame, we've got this back and forth, right? This is a perfect description of our white space right here. Price is just moving up and down between these two, lines right here. And on a bigger time frame, you're not going to want to get into anything from there. I will draw this one out here since this is technically speaking a zone, right? And price has hit this. So let's do this, right? Since this is below the white space, it still could potentially work, especially in an index market, right? Index markets are all they're designed to go up. You can potentially, especially bigger zones like this where price barely touched it right here, not unusual to see these things work again. But check your lower time frames, validate that the prices change around before you jump back in here. But it wouldn't surprise me to see a price change there. And we do have an area right below it as well, which is a very, very clear, strong zone that should work as well. That's our weekly look here. On our daily, we had just a really good view here of what of another missed entry on my part. And I had these, you can see that there were 3 zones done over here. One of them worked as a break even, one of them failed completely, and then the other one never hit. So this is that kind of danger of having multiple zones where you've got this area, right in here where price can come into, stops you out of one trade but doesn't quite get you in on the other. We were watching this overall trend up here, which turned this into a nice consolidation zone. And as we were looking, and what I was, planning on, what I thought was going to happen was price was going to jump up in here, hit this actual zone, grab my trade, and then moves out. Well, and what happened is it moved out as expected, but didn't go up as far as I was expecting it to. And so we just missed out on that trade. And again, this is one of those ones, especially since it's a short in an index fund, no way I'm taking that. Again, this trade actually pulled that trade off on Wednesday, I think, when this happened. It moved out on the 24th. Yeah, so on the 24th is when I saw that move well below and pulled that trade off, and you can see prices now just coming down significantly from there. So where are we going to get back in on this, moving back up again? Honestly, sorry, let's go back to the daily chart because there is nothing else out here. You can see this area here that has worked multiple times. Again, not something you take multiple times, but just an understanding of how often it's worked. 1, 2, 3, 4 times. Price comes back down here, it's going below. Probably going to go back down into this area down here. That's where I would look for something to change if it gets down there. Again, we'll look at the index markets for the U.S. index securities for the U.S. markets. Let me fix the screen here. Looks like it's turned around a little bit on me. I can do this real quick. Okay, here we go. Let me just fix this for you real quick here. Primarily what you'll see there is that the U.S. index markets are stronger than the Japanese one, and so therefore even if the Japanese market doesn't go down this far, the U.S. index markets might drive it back up again. And I'll just show you one other quick thing on the 60-minute chart. Right, once you see the confirmation that price is moving down from some of these areas, and then you've got good strong zones marked on lower time frames, these tend to work out very, very, very well. And so you got, again, a good indication in the larger time frame that price is moving the way it is, and then you go down to your smaller time frames, you see something like this. These are the ones where you jump in and you stick in with them for a longer period of time. And this is, as you can see, moving down very, very well from this area right here. Okay, bond markets. TY is our 10-year bond. And we had, let's see, weekly time frame here. What we had here is areas drawn up, again, that were not good solid ones, but we thought were areas of probability. We didn't get quite down into it, and I will show why when we go to our 30-year bond. Right, these bond markets, they are separate, but they do tend to work together in certain ways. You know, when one of them hits a strong zone, the other will react to that same area there. And I'll demonstrate that in just a second when we get to the U.S. bonds. But I want to show you we did hit an area. It's a little bit higher up on even this is the 10-year bond, and we hit this daily zone. Just real quick, go over and take a look at it. Very, very strong areas. Lots of additional odds enhancers of why both of these areas might work. And so we put trades in on these. Didn't expect quite as strong of a move as we thought. I was expecting it to get down to more of that weekly area, and I actually thought that this second zone down here was going to work in a stronger way. But we'll see. I mean, price, if it continues to drop down again, then I would still take this second zone as well. And so this one is working though, and it would have already gotten that 4-to-1. I'll just pull that up here real quick, just so you can see that this 4-to-1 result did hit here. So that would have been was a very successful trade for us. Looking at the 240 time frame, since we're in an overall lower move here. We're going to look up and left to see if there's anything of interest in these areas and this area here. So technically speaking, this is a zone, right? We have our leg in, base candle, leg out. We'll leave this one marked, but I'm going to look for confirmation on the U.S. on the 30-year Treasury to see if there's something in the same area to know how we would play this one. But this is a zone. It's actually got a couple of odds enhancers now that say it's going to work. We are still in a bigger picture overall trend down, so we're looking to get back in on shorts on this. So we'll leave this one in. That's on 240. Let's look real quick on a 60. The stuff over here in this area is just, it's too messy for me. I'm not going to dig in on it because I don't, yeah, it's just not, it's not clean enough. And prices moved up too far to even look at anything smaller time frame. So let's just jump over to the US because I want to get to the index funds before we have to end for today. Real quick, this is what I was talking about on the comparison between where that 30 or the 10-year bond worked versus where this zone was at on the 30-year. And the 30-year bonds are just a little bit stronger right now because of the housing market. And so what you saw is we had this really, really good area on the 60-minute time frame. And so if you go back and just look at the actual area itself. Sorry, I zoomed way past that. Where's that at here? Okay. So we had a very, very strong area here, and we had a couple of ones, zones on top of each other. The first one didn't work, but the second one did, and that was because it was aligned with the 10-year bonds. So that's another odds enhancer, right? If you get both bond markets that are lined up in strong zones, good indication to take them. I was also watching this when it happened as well, and so what I saw here was just another perfect example of why we use RSI to help us out. So you had price that was moving down. You had RSI that was moving up right here. So you had both bond markets aligned. You had RSI, negative divergence, and we were coming into strong zones on both of the markets. So that's why we take those trades, right? You have multiple odds enhancers, and as you can see, this one worked. It hit my target, and because I still feel it showed that these markets are still in an overall downtrend. I didn't hold on to this one longer. It hit my target, but as you can see here, right, price has gone up, 10, 15 times over the overall risk for this trade. So I just wanted to kind of show you that's that kind of the alignment of events, and when you see those things happen, that's just very, very, very high probability that those trade areas are going to work out and work out well. So just real quick, let's go back and look at this market overall. And we're still in a weekly time frame. Again, we're still in this bigger picture here. We're still coming down. It's still a weekly downtrend. These zones are still working. What happens when if price comes back up into this area will determine whether we've changed trend or not. But as you can see, we did come down into another weekly zone. So it's not surprising that now we're back between these two weekly zones here. We don't know. There's no way to tell which one of these is going to work, which one is not. So that's why once you get in the middle of these areas, you don't want to take these very, very long-term trends, right? These are going to be shorter-term trades until we can establish which trend is the stronger one, and then that's where you would get on those much longer trades on. On a daily time frame, we do have something right below. This is why I still think that there's a possibility that second zone on the 10-year bond might work as well, because this is a very, very strong area down here still. If price does not break this pivot high and comes back down in this area, I'll definitely take this one, but take this one for a much longer move up, because that's the one that would probably then reset the overall trend. So we already looked at the 60-minute time frame here. So yeah, so we're good with the U.S. market. So we'll look at A couple of the index markets here just to get an idea of where we're at overall, and then we'll go ahead and end this session after we look at these three index markets. Again, start with the weekly time frame. Index markets, remember, they're designed to move up. That's all they do. And so you can see here, right, and I won't zoom in on this, we don't need to, but just big strong move up. Again, you're seeing this small corrective phases every once in a while, right? Correction, small correction, moderate correction. Could we see that same thing, right? To stay on this same general trend, right? You can see this one probably from here on up is a good way to look at it, right? Could we see something coming back down into this area and then moving up again? Absolutely, right? That would just be very, very consistent, unless we have some, major disaster like we had back here when COVID hit, right? That's what drove the markets down as far as it did. But you will notice, and I just show this just to kind of give you an idea of what how powerful supply and demand is. That big move, right, that was driven on news, right? This was call it an artificially generated event, right? The world chose to change our behavior, change our actions based on COVID-19, drove it down here, and we still hit a perfectly defined demand zone on a major index, and that's where price changed at. So news can make things get to their zones faster, but news can't necessarily change supply and demand. Supply and demand does rule all, right? Those are fundamental, numbers, accurate numbers, and it doesn't matter, what type of a story we try and tell around them. Numbers just won't change to suit our purposes. So back on a daily time frame. So this is where things are a little bit interesting, right? We talked about what the Japanese market and the DAX, but neither of them had these significant demand zones that were close to where current price action was. However, we've got one in the S&P 500. And again, I have this marked as a dashed line, which means I'm not certain that it's going to work. However, it is here. You do see that price did come below the lower Bollinger Band, the two standard deviations. So we got a couple of indicators that this might be a good spot where price is going to level off and keep moving back up again. If it does so on the U.S. index markets, it will do so. It could potentially change, the German and the Japanese markets as well. So we've got that indication going for us. And if I just look here, I'll bring up the 60-minute chart. Says it's got another good indication, right? So you've got a good strong zone here on the 60-minute chart. Let me just zoom in on this one for you real quick. Very, very strong zone here with a couple of good odds enhancers. This zone is also in the middle of that daily zone. So another good indication that this zone has a high probability of working. And as you can see, prices come into it. We don't yet have, I don't think we have negative RSI divergence. Let me just check the exact numbers here. 1838 on this one and down to 1595. So yeah, no negative divergence here. So that would be a strike against this working in a strong way. Price is still going to respond from it. We just don't know exactly how far it's going to respond. So I'll look at the NQ just to, again, we're looking at when prices moved as far as they have right now. This is where you start looking at bigger picture time frames. You don't really pay a whole lot of attention to smaller time frames. It's a recipe for disaster. Same overall picture here, right, where we have this very strong move up. So we're looking for a corrective action here. Is not surprising, but we're not seeing anything that would indicate a major move down at this point. So that sets our context. Let's look on a daily zone. And this is what you'll see every once in a while on TradeStation. I haven't seen it on other platforms, but every once in a while the price action gets bugged, and you can see here you've got a candle that goes all the way down to 0. Actually, it's a negative candle. So there's some bug with the information that they've sent out. I would expect that this would be corrected probably when the markets open tonight. They'll have fixed this, but it does make for a little bit of an odd picture here. Clearly, that's not an entire green candle. Price did not go that low. But what you do see is price did go in. We hit this first area right here. Again, we weren't certain that it was going to change. We didn't see a lot of good indications that it would, and it didn't there. But price has gone into this last area down here. Let me get an accurate reading of how far exactly price came down. So we came all the way down to 15,903. So let's just note that here, 15,903. So we came all the way down into here. Price is now moving up. So again, you've got both the NASDAQ and the ES that are correlated, right? They've got zones in both of them. Even though we've had them listed as dashed zones, so not high probability areas of price changing. When they line up like that, that can sometimes be a very good indicator that price is going to change there. And again, the U.S. markets are typically stronger than the overseas markets. So when you have uncertainty in the overseas markets, but you've got this type of correlation in the U.S. markets, those are pretty decent probabilities there that price is going to start moving back up again. We also had the index, or the indication on the VIX chart as well, that showed that price was likely on the index was likely to start dropping again, which again would push the U.S. markets up. Let's look at RTY again for that same area, and what you'll see in the RTY. So RTY is a little bit different, right? It's the small business index fund, and it can typically be used as a risk indicator for the other markets, where other markets might be going up, the RTY would be going down. When the other two or three major markets go down, the RTY sometimes goes up. Just very quickly though, on the daily time frame here, you'll see that same area on the RTY responded, just bumped off of there. And you'll see that in just a second, right? We had price hit it here and moved up, a 1-to-1 or something like that. So it was that small move up, but then price kept coming down. So there's substantial expected weakness in the small business area, which this really makes sense, especially for when you get things like the new COVID variant. If we go into additional lockdowns always hit the small businesses harder than large businesses, and so that's this overall weakness in the Russell 2000 is not unexpected based on something like that COVID variant. We don't see anything low down and left here of where price could change there, so I'm not using RTY as any indicator of what price might do. There, I just want to look. So we almost have, the only thing that I will point out is even after this strong move down, right, you've almost got negative divergence here on your RSI indicator. When you see something like this happen, where price comes down, back up again, and comes back down and can't break this and then keeps moving back up again, you can sometimes use this as close to negative divergence between price action and the RSI. You do see the RSI chart here moving up significantly. So just a small indicator, maybe the RTY is going to jump back on with the other two major indexes and keep moving up. But again, we're not trading on that. Those are just indicators of where we think price action may be going. Just a note on the YM, so the Dow Jones Industrial. I don't trade that at all. I typically don't even chart it because whereas something like the S&P 500 made up of 500 of the largest companies in the world, NASDAQ, multitudes of companies, and specifically tech companies, which are very, very large ones in the world. Russell 2000, there's 2,000 companies there. The Dow Jones is made up of 30, which means an individual company, individual stock in that index can have a major impact on the overall index. I don't like that. To me, that's additional risk. I don't want to take that additional risk on, so I don't trade it. That's why I'm not looking at it. However, if anyone out there does, anyone out there has specific requests for it, we can certainly look at making changes to that to at least take a look at it. But just wanted to give you an understanding of why I don't look at it at all. So with that, we'll go ahead and end for the day. I do apologize on time. We didn't get to the crypto or the individual stocks. Again, if you have any questions on those, please let us know. And we can certainly put that into the schedule if there's enough interest. Thank you all for participating in this. Thank you all for participating in the overall channel and supporting us. Please remember to subscribe to get notifications of new videos as they come out. Leave us comments. Let us know if we're doing things that are helpful to you or if they're not, so that we can make changes to the overall platform and the overall channel. Again, a reminder, we'll not be on live tomorrow. We'll be live on 8:15 Eastern Time on Tuesday, though. So have a safe trading day tomorrow, and we'll see you on Tuesday. Thank you.